Hey everybody, this is Andrew Perlin, and welcome to another edition of Insurance Explained. Our goal here is simple, helping people understand insurance so they can make better decisions before life puts those decisions to the test. Today, I want to talk about an old client of mine that I've been working with for several years now. And he was in the midst of making the biggest decision of his life, and that was to leave his employment and start his own company. So he's a very successful young man at the time. He was making really good money, great benefits, great salary. He loved his job. Everything was fantastic. And on paper, like he looked great. Although he had this itch, and the itch was to start his own business. He was starting a family and he just wanted to have the flexibility of kind of doing what he wanted. So he decided that he was going to do that. So we were talking about all of this prior to him making this decision. And we were talking about like the pros and the cons of owning a business, right? And the pros, of course, are like, more money, more flexibility, work your hours and you own it. But the cons in his particular case was he was leaving behind a lot of stability. He was leaving behind a really nice paycheck. He was leaving behind benefits, health insurance benefits, 401k benefits, disability insurance benefits. So we had a really long conversation over several meetings to kind of figure out, is this really what we want to do? And if we do this, if we move on from his employer to start his own company, what's that going to look like, not only from a business perspective, but also from a protection perspective? He was leaving a lot of things on the table. So I couldn't, I can't make this decision for him. He decided at some point he was going to do this. So as we were going through it, I was like, look, you got to have health insurance. I mean, obviously, right? I think he was able to get that through his wife's employment. Great. But I was like, hey, you know what? The big thing here, though, is that you're leaving a lot of employee benefits on the table. And the biggest one that I can look at and that I'm looking at here is you're leaving behind disability insurance, right? Your employer sponsored disability insurance plan. He agreed because he's like, you know what? If I don't make money, if I'm disabled and can't earn an income, my family is hurting, even though his wife earned an income, it just wasn't quite what he was earning. So we decided before he left that put an individual disability insurance policy in force on him just in case. Now, listen, I hope he never needed it. And he hoped he never needed it. It was just a safety net. It was just in case something happens. We put all that in place. Life was great. He did what he had to do. And over the next several months, he was transitioning out of his current role to his new business. That happened. And he was probably working for like 7 or 8 years and it was going great. He was able to kind of get back a lot of the benefits that he lost from his old employer. His income was rising at a pretty rapid rate. So it was working. This was the whole reason why he wanted to do what he did. And he was a solo practitioner, though. And so his overhead was low. He didn't have anyone to really help him. He was doing it all himself. And it was great. And then, of course, life gets in the way. His life changed. And he was diagnosed with a pretty severe chronic degenerative disorder that resulted in an awful lot of pain. And he just couldn't focus and concentrate on his business anymore. And he didn't know what to do. So once this diagnosis came down and we went through the normalcy of getting his policy paid, the disability eventually kicked in. He had a 90-day wait. So he waited his 90 days. His disability insurance kicked in. Now, what that did was it not only paid majority portion of his salary based on the contract, but it also gave him the breathing room financially to keep his business going and to make sure that that was not going to suffer as a result of him not doing the work. He was able to do things that he wouldn't have been able to do ordinarily without jumping into his savings account or jumping into his investment account to make this happen. So obviously we don't like the fact that he got this disease, but at the same time, because he planned ahead, it really wasn't that big of a deal from a financial perspective. It's still a big deal to this guy on a physical perspective, but he's working through it. So the thing that I want to just kind of tell you right now is that most people think that their biggest asset is their home or their investment account or their savings account or their business. And I would say they're all important assets. Don't get me wrong. They're important. You need to have them if you want to have a retirement, right? But the biggest asset that you have is your ability to earn an income. That is the number one thing that drives everything else. His income funds his retirement. His income funds his savings. His income funds his lifestyle. His income, in this case, is going to fund his business, right? So without income, everything stops. Now, we spend a lot of time insuring things that we own. We have homeowners insurance. So if our house burns down, our homeowners policy will build that back up. We have auto insurance. If we get into an accident and total a car, our auto insurance will make us whole. But for the most part, we don't insure the one asset that keeps every other asset moving, and that is your ability to earn an income. because if you lose that, everything stops, right? Because in this particular case, what he would have to have done was dip into his savings account to pay the bills, dip into his retirement plan to pay the bills, pay the penalty because he's not old enough if it was in his IRAs and things like that, right? He may have to lose clients. He ended up using some of that money to hire a contractor to keep things moving. It gave him so much more opportunity and much more flexibility that, yes, he was dealing with a very painful thing. And luckily that he was able to get through that, but it didn't affect his lifestyle that much. And it did not affect his savings, his retirement, or whatever. We did a calculation with him after the fact, and the pure fact that he had this disability insurance, and I think he was on claim for about 2 years, right, saved him nearly $1 million in assets at retirement. $1 million out 2 years. I mean, it's crazy. So the thing that I'm trying to get across to you all today is that I know everyone thinks that these big assets that you can see and that you can touch are what's most important. I'm here to tell you they are important. Don't get me wrong, but I'm here to tell you that the thing that funds all of that is your income. And that's what you have to protect. If you can protect your income, then you can protect all the lifestyle choices that you've made to this point. You can protect all of your assets that you've created to this point, because it all starts and stops with your income. Your mortgage payment, your auto payment, your retirement planning, your vacation fund, all of it is coming out of your income, which is why I believe that is your most important and most precious asset. And I believe that every professional should have some form of disability insurance. It's super duper important. And the worst case scenario is that you have disability insurance and don't need it. But most likely, there's a better chance that you will need it. So I'd rather you have this option and this flexibility to keep things moving forward. The last couple of episodes, I was talking about the Athlon Insurance Scorecard, and it is a wonderful tool that we've created. It's a brief 5-minute questionnaire, if that, and it gives you an idea of where you are right now as far as your insurance portfolio is concerned. Are you properly covered, or are you not properly covered? And if you're not properly covered, where are the deficiencies? This is a no pressure, no sales thing. I'm not trying to get you to buy anything. I'm just trying to make you aware of where you are. Right? Every year you talk to your accountant to make sure that your taxes are right. Every year you go see your doctor to make sure that your health is right. Every year you should be seeing your financial advisor to make sure that your assets are growing. Every year you need to look at your insurance portfolio and make sure that you are properly protected, because as my client found out very abruptly, life changes in a snap and you have to be ready for it. Your strongest financial plan has to be able to withstand the worst case scenario. Because under the best case scenario, you might not need a plan, right? If everything is moving up, you might not need it. But when life throws you a curveball, you have to be able to adjust. And if your financial plan is not taking that into consideration, I would argue that you don't have a plan at all. And it's the same thing with your insurance portfolio. If your insurance portfolio is not properly set up, it's almost like not having insurance. There's a difference between being covered and being protected, right? We want to make sure that you are properly protected. Like I said before, the worst thing that anyone can ever say to me is, I thought I was covered. Okay, so please take a moment. The link for the scorecard is in the comments. You'll immediately get an email back telling you what your score is, if there's any deficiencies, and the best way to handle that. All right. Listen, thank you very much for being here. Please subscribe to the channel. We are growing every day. If you feel like this is information that other people need to see, please share it with them. Again, this is not designed to sell you anything. This is purely designed to get information out there in a very easy and understandable way. All right. Thank you very much for being here, everybody. Have a great day. Take care.